Yeah, good morning, everyone. We had seen yesterday some corrections in the US market ahead of expectation of non-farm payroll data. We are seeing market is now hovering at the higher end of level in the US market after a very strong run-up in last one and a half month. Apart from that, if we see the Asian markets are seeing some mixed reactions, wherein Hong Kong and China are positive, but rest of the markets are seeing some profit booking. And even in the commodity also, we are seeing some profit booking or maybe some corrections. Oil is down by around $0.5, same time yesterday, whereas iron ore and steel are also down by 0.5%, and other metal like aluminum, copper are more of a flattish. So some sort of stability or profit booking or range bound trade you can see is happening world over. We had seen yesterday sharp move up in the market, and a lot of volatility was seen towards the end of the settlement. And this volatility, though, uh, was uh, very much high. Ultimately, market ended with a big gain. So after such a volatility and gain, normally we had seen that next day the market sees some stability or profit booking. So quite possible that the market may remain range bound or see some corrections into the trade. But the important thing is the RBI policy, how they that is come out, which will have influence on the market in today's trade. The expectation is that rates are likely to remain stable, no change is expected. Even in CRR, though there are some talk in the media that there could be some cut, but the consensus estimate of economists is that it will also remain unchanged. Whereas considering that the GDP came down very sharply in last reading, the expectation for rate cut has built up for the February month. And now to be seen that how the CPI behave, the expectation is that CPI, which ran up to very high level of 6.21 in the last month, is likely to come down gradually in coming months, and by February, it should give space for rate cut coming. So need to watch how the RBI governor say about their thinking on rate cut. So that will have some influence on the market. In internet, so that need to be watched in today's trade. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday, Nifty managed to sustain the 50 DMA and a comfortable close above that 50 DMA. We expect today flattish open and remain range bound, remain a range bid during the day. Yesterday we saw the volatility in up and down, and last half an hour again Nifty trade towards 50 DMA and close above that important range. The next important intraday resistance place around Nifty 24,470 and 800 and upside. Next major resistance place around 24,800. If Nifty break this range in closing basis or weekly close above 800, then we expect further rally towards 25,000. Downside major support place around 24,640 first, and below that 24,570 is an important support for Bank Nifty, that is 50 DMA. We closely watch today's session's closing, and then we expect in up move if Nifty manage to sustain 800, 24,000, then we expect further rally. Otherwise, we see some range that is upside 24,800 and downside 24,570, that is 50 DMA. Bank Nifty also given a good rally last 3 4 trading session, and we expect the upside first immediate resistance around 54,000. If Bank Nifty break closing basis this range, and then we expect further rally because last few trading session we saw that Bank Nifty given a good rally after trading above the 50 and 200 DMA. So we expect upside right now trading in overbought zone in Bank Nifty. So we closely watch if Bank Nifty break this important resistance, that is 54,000. If break, then we expect 54,340 and then 54,570 in upside. Downside first major support place around 53,370 and 53,000 is a major support for Bank Nifty. Below that, we expect further profit booking in Bank Nifty. Both are index trading in upper range, and we expect some volatility in both index. Today we closely watch the end of the day Bank Nifty and Nifty the break the important resistance zone and closing above. Then we expect next week in upside rally. Stock specific, TCS looks good at current level also. We already given a call in TCS. TCS in technical front, RSI and ADX both study in favorable for TCS in upside. To expect this positive momentum to be continue in TCS upside 4600 and 4700 next immediate target for TCS. Downside 43, 40, 4300 is a major support zone for TCS. Reliance also looks positive. Last three trading session, Reliance trading within the range that is 1300 and 1330 range. But today's Reliance break 1330, then we expect upside momentum towards 1370, 1400 in upside. Downside 1290 is important support for Reliance Industry. This call also we given a last day, last few trading session. That call is on. We expect this positive momentum to be continued Reliance. Negative side, Oro Pharma looks weak. Cipla also looks weak, but Oro Pharma given a downward breakdown. Do we expect some pressure comes in Oro towards 1170, 1140 at downside. Right now trading 1240 and important range upside is 1270. So if at 1270 again break, then we expect further upside move. Otherwise, we see some technical negative in Oro Pharma. To second, Voltas also looks weak at current level. Last few trading session, we saw that 1740, 1720 is a major resistance for Voltas, and we see some profit booking and upside. Below 1660, we expect this pressure to be continued towards 1620, 1600 at downside. Upside 1700 is the first resistance for Voltas. That's it for technical. Derivative I can get.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have seen that in yesterday's session, major volatility has been witnessed from the Nifty front from 24,300 to 24,850 levels. When the pullback came from 24,350 to 300 to 750 mark, the breakout which took place at 24,600 level, at that point of time, we have witnessed that major call writer positions got liquidated, due to which the short covering rally was witnessed on the higher front, and due to that the next week rally we are seeing right now in the positioning wise as per the OI, the position like 24,500 level, we are seeing the put writer positions have got added up strongly with the upside level towards the 24,800 to 25,200 mark. Once if in today's trading session or in next 1 to 2 day of trading session, if Nifty manages to get a close about 24,800 level, then the range shifting will take place towards the 25,200 level. So setup looks positive. The support for the Nifty in today's session will be 24,500 level. Once if Nifty goes below 24,500 level, then we might witness some sort of profit booking, or else the market strength seems to be on the positive front, should hold the long position. So India VIX yesterday closed at 14.5 level. India VIX is still trading about resistance zone. Once if India VIX goes below 13 level, then only we might witness some stability, or and the fluctuations or volatility will get decreased in the market once if India VIX goes below 13 level. But till the time India VIX is trading about 13 level, till that point of time, we might witness some healthy fluctuations in the market. So whomsoever holding the long or short position should hold it with the strong strict stop losses for the downside levels. While PCRY yesterday closed at 1.24 level, PCR closed at the strong levels. The support it closed above 1.08 level, which was the major level due to which we might witness some more buying in the market. The upside level for the PCR comes towards 1.40 level, as we are seeing that to the policy is also there at 10 a.m. So after, we might witness some major movement in the market in the second half. Or till that point of time, we will witness some range bound momentum in the market of 300 points from 24,500 to 800 level. So, but in second half, if Nifty manages to get stable about 24,800 level, then new long position can be created at that point of time. As per the stock and sectoral specific front, overall IT pack looks positive. Selective counter will be TCS, LTIM. Both looks positive in today's day of trading session. Another counter that looks positive will be Max Health and Angel World. While on the negative front, JSL, Oil, and Dalmia Bharat looks negative. So that's it from value to front. Thank you.
Good morning. Yesterday we attended a conference call of Access Gates Technology Limited, wherein the company gave business update for earlier announced strategic restructuring of its defense-focused subsidiaries. To give perspective about Access Gates Technologies, it is a technology company which provides engineering and tech services to various industries like aerospace, defense, automotive, heavy engineering, etc. The company mainly works with the global OEMs and tier 1 suppliers in these industries. So, AccessGate recently announced a strategic restructuring focusing on enhancing its defense subsidiaries. First one is Mistral Solutions, and second is ACAT, which is a aerospace subsidiary. So, company will be integrating these two subsidiary, wherein Mistral will absorb the ACAT's operations while maintaining its entity status to utilize defense licenses and contracts until full integration is achieved. Company will be aiming to expand the partnership with major OEMs and also enhance the product offerings for them. So overall goal is to establish Mistral as a major player in defense and AI sectors, targeting 60% of revenue from defense sector from the current 30%. So this change in mix, we believe, will also see better blended margins at consolidated levels for the company. And this restructuring is set for completion by Q4 of FY25. Talking about company's financial performance, company has guided for a better H2 FY25 in terms of both revenues and EBITDA margins. And it is also foreseeing some 50% higher order intakes for FY26 as well, especially in the anti-drone, missile, and submarine programs. So overall outlook for Access Gates technology is positive. That's it from me. Thank you.
Good morning. Today, Suraksha Diagnostics Limited is listing. The price band at upper end was at rupees 441 and the issue size of rupees 846 crore. The offer was completely offer for sale and no fresh issue. We recommended neutral to the issue. The company was incorporated in 2005, which offers pathology, radiology testing, and medical consultancy services. It has a central reference laboratory with 8 satellite laboratories and 215 customer touch points, including 49 diagnostic centers and 166 sample collection centers across West Bengal, Bihar, Assam, and Meghalaya. It has 95% of its revenue derived from the West Bengal. The company had reported the sales of rupees 219 crore for FY24. And it has seen the CAGR of 20.8% between FY22 to FY24. If we exclude the revenue from the COVID, it posted the profits of rupees 23 crore, and the EBITDA margins were at around 34%, which is best among the peers. At the upper price band, the company's price to earnings ratio is projected to be around 96 times based on FY24 earnings. And if we annualized, the PE ratio would adjust at around 75 times. That suggests the company's valuation is on the higher side compared to its peers. The company has a fair valuation if we compare it with the most prominent player in the industry, but it has a lower return ratios. Hence, we had recommended neutral to the issue. On the news front, the Ministry of Finance has imposed a provisional anti-dumping duty on imports of textured, tempered, coated, and uncoated glass from China and Vietnam. This duty is of around $565 to $677 per metric ton and will be effective for 6 months from 4th December. So this is positive for Borosil Renewables. Thank you.
Yeah, apart from this, we had a management discussion of with Diffusion Engineering Limited. Company is into welding welding parts and welding wearable consumables, mainly used in the cement, steel, power sectors, where the welding is relatively higher and wearable parts are used. Apart from that, company is also in the wear plates, which is used in the uh, grinding in lining of the grinding equipments, again used in cement, steel, power sectors, and also they are supplying heavy engineering equipment, specifically roller required for grinding and all. So, company has revenue of one third in all the three divisions, and has a very strong positioning in the industry, and it's more of an emerging business comparable to companies like AI Engineering or Tega Limited. So we though they are not in the same product, but more of a uses of the products are of a similar nature, and for different products. So can be more of a similar to that type of companies. What we see that company has indicated that they are running right now at comparatively high capacity utilization of 85-90%, and they had planned for expansion with the IPO money, and they will be doubling the capacity, which will be starting from November 2025. So till then, time company may struggle for growth, and has indicated that they will be growing anywhere between 15 to 20% in the current year, FY25. But the growth will come once the capacity comes up. From next year onwards, there could be growth of anywhere between 25 to 30%, and full benefit of the expansion will be visible in FY27. So overall business looks quite promising, though near-term growth looks bit slow. But if we consider FY26 and 27, the growth will bounce back very sharply. There is, with the higher utilization and higher revenue, there will be some expansion of even the margin also. What we see that company currently is trading at somewhere at around uh, 21 times FY27 earnings. So there is some scope for the prices to move up. The prices can move. The other companies like AI Engineering or Tega is trading somewhere at around 30 times FY27 earning. So quite possible that over a period, this stock also can move towards that directions, and can see upside of around 25-30% from the current level over a period of time. So the outlook looks positive from a long-term perspective. The company name is Diffusion Engineering. And I'll request the commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we have witnessed a pullback in gold and silver. So for trading purpose, one can initiate a buy around 76 500 with a stop loss of 76 200. And on upside again, 77,000 is the area where 76 800 to 77,000 is the area where we recommend to book profits. Whereas in silver prices are expected to test 93 500 94,000 on upside. So buying on dips is recommended around 92 500 with a stop loss of 91 700. And in metals, zinc prices, one can initiate a buy around 289 with a stop loss of 287. On upside, 292 is the target we are eyeing for. Whereas in copper, we are expecting buying momentum to continue if it is sustaining above 820. So one can initiate a buy on dips around 822 with a stop loss of 817. Again on upside, 827, 830 is the area where we are witnessing a resistance zone. So profit booking is advisable, whereas fresh buying would be witnessed above 830 move. In crude oil, though we are witnessing a range bound movement from 75.50 to 58.70, prices are near the support area of 57.50. So for trading purpose, one can strictly buy with a stop loss of 57.50. Again on upside, 58 30 58.50 one can book profits, whereas in natural gas too, one can buy if prices are sustaining above 258 and maintain a stop loss of 250. On upside again, 268 270 is the target where one should book profits. So that's it from us. Thank you very much.